Certified Management Accountants of Sri Lanka, the national professional management accounting body in Sri Lanka. Incorporated by an act of parliament, CMA has always played a lead role in this digital environment to update the knowledge of its members by organizing continuous professional education program for its members and students. The presentation on recently proposed tax reforms 2022 will be delivered by Mr. Abdullah Ranavira, Managing Partner, Ranavira Associates. This will be followed by with the panel discussion moderated by Mr. N. Sulaiman, Tax Partner, Ernst & Young, and the panelists are Mr. S. Pereira, Principal Tax and Regulatory at KPMG, Mr. K. Sivanesan, Tax Consultant and Senior Partner at Amarsagar and Company, Dr. K. Rajabaksa, Managing Director, DSA Group of Companies, and Mr. N. Gunawardena, Managing Partner at Nithya Partners. I also warmly welcome CMA President Professor Lakshman R. Vattavala, President of SAFA and Vice President of CMA Mr. Henaka Bandara, Council members and members of CMA, invitees, ladies and gentlemen. To commence the program, I have pleasure in inviting Professor Lakshman R. Vattavala, Founder President CMA Sri Lanka, to deliver the welcome address and introduction to today's topic. Professor Lakshman R. Vattavala has led the Sri Lankan accounting body, starting with the Chartered Accountants, the South Asian Federation of Accountants, founder of the Accounting Technician and founder of CMA Sri Lanka and SAFA board member and chairman of SAFA International Relations Committee. A proud receiver of the National Honor Sri Lanka Sihamani in 2009, installed in the Hall of Fame of the Institute of Chartered Accountants, and was awarded Lifetime Achievement Award by the CMA Sri Lanka. He is also Professor Deakin Business School, Department of Accounting, Faculty of Business and Law at Deakin University. Professor Lakshman R. Vattavala, I am honored to invite you to deliver the welcome address. Thank you. Over to you, sir.
Thank you, Mr. Gajendra. Mr. Gajendra is the chairman of the CMA Taxation Committee, and I'm very happy that he has been closely involved in the organizing of these events. We also have the president of the South Asian Federation of Accountants and the vice president of CMA, Mr. Hennayak Bandara, and of course our eminent speakers and panelists who have been introduced by Mr. Gajendra. Let me also welcome our members of CMA and all our other invitees who are present here. When I look at tax seminars, I find that the largest number of registrations are there for tax seminars or webinars that we call, because we are having almost 700 registrations, but I think people are still coming in. But normally in the case of webinars, we find that roughly 50% will attend, because this is a normal thing, either in Facebook or other areas, always will put a yes or no and then forget about it, So, but I think these are very important seminar that we are organizing, and we are having our, of course, I think Mr. Suresh Perra has just come in, so let me welcome Mr. Suresh Perra also. And a very eminent speaker and panelists. So they will do justice to the topic. The topic, as introduced by Mr. Gajendra, is Sri Lanka's tax reforms to revive economy. Now, we are all engaged in reviving the economy. Now, if you look at the private sector, we are engaged in our activities. But we are rather unfortunate to see that the good that has been done by the private sector is swallowed by the government sector. So whether we can say that we are in this critical situation, is it due to the private sector or is it due to the public sector? So this is a question that is being asked. So if the private sector is doing extremely well, if the stock market is doing well, if the profitability of the banks and companies are doing well, does it mean that the economy of the country is doing well? Now, this is the biggest question that we have to ask, because we are in a very, very critical situation. They say challenging, but it's not challenging, it is critical. We are almost down in the dumps. Today, there is no foreign exchange available to this country. Now, we have a new Prime Minister. Fortunately, he is one who has pointed out the mistakes that we have made. Earlier, no one has pointed them out. The big deficits that we have had. Now, the revival of the economy is based on the fatal mistakes done by the government in 2019. And he has stated that in Parliament that the government lost 600 to 800 billion rupees as a result of these adjustments. Who is responsible for this? When you say government, ultimately no one is responsible. Whether the Parliament is responsible, whether the ministers are responsible, whether the officials are responsible. Today, we don't hear anything about officials. But I think we have to have a system that will make everyone accountable, those who take decisions. Now, who took this decision in 2019 to reduce the taxes? And for the government to lose 600 million to 800 million rupees. Just think now, those who are in the private sector, if your CEO or the board takes a decision like that, you will be changed overnight, Action will be taken against you if you have done some fatal mistakes. And there will also be monitoring, which will result in these not happening early. Here we wait till the end and then find the mistake. So the government has to put things right. Otherwise, now they say that in 2019 with this reduction, it's not only that. There were many other, the budget deficit. How would we bridge the budget deficit? Foreign loans. They started the famous, what was called the international sovereign bonds, which no one knew what they did, How they took it, no one is responsible. Ultimately, now we have no money to pay those loans. So this is the unfortunate situation that this country is. The Prime Minister said the GDP ratio, we would expect it to be 25% of our revenue to GDP. But what did we have in 2019? We had 12.7. And once it was reduced to 2020, it was 8.7. So which resulted in a very heavy deficit in our budget. So today, as accountants, we are very, very sorry to see that this country is in this situation, because financial management, cost management are very important sectors for this country. Today, no one knows what is the cost of a product. Now, 2019, what was the other thing that they did? They removed the pricing formula. When you import the fuel, the IMF told them you go to a pricing formula. Pricing formula means the customer, if the price reduces, he will benefit. If the price increases, he will have to pay for it. But what happened? They removed the pricing formula because it was done by the previous government. These are the fatal mistakes that are done. Politics and economy don't go together. I think the new Prime Minister has said that he has nothing to lose. He is one member in Parliament, he said, but he's been heading major parties earlier. The party that he held has been ruling this country for a very long period. 19, 20 years they were ruling. So he knows what has to be done. But he has to get the support of the politicians. Political stability is very essential. And today we need to see how the local people could be given all the benefits, because today we have a food scarcity. He has mentioned that. So how are we going to overcome this food scarcity? Give all the incentives, give the fertilizer that is required. And if someone has made a mistake, so there is no one responsible for making these mistakes. That is the biggest problem we have. Then look at what they are going to say. I saw a news item today. They want to give 40-year tax holiday for those who are investing in the port city. I think that was not even mentioned in the Prime Minister's statement. But these people are saying 40 years. How can you give 40 years? First of all, you must look at maybe to give 40 years to the agriculture industry, to our industry who are going to substitute for local instead of foreign exchange, the IT industry, digitalized system, but they are talking of something else, So people are talking in different ways, and today our country will go from bad to worse. So we need to see how this could be done and how the people can benefit. Because if you take integrated reporting, one of the most important things of integrated reporting is the value creation. Today, all this money that is spent, now the government, Prime Minister has said he needs $6 billion for the next 3 to 4 months. So from where are we going to find this? We have to get our friendly countries. Then he says he's going to appoint a parliamentary committee to look into why the Japanese project, where we got the funding. The Japanese project was cancelled. Now we are going to Japan and asking, please give us some money, we are in difficulty. Now, these are the sort of mistakes, fatal mistakes we have done. But ultimately, no one is responsible. In accounting, we know that we talk of accountability, we talk of governance, we talk of transparency, but ultimately, nothing is happening. So we need to see how this whole thing could be changed. But today, we are going to have a seminar on the tax reforms to revive economy. Because today, as I said, this is very important to everyone, because if you increase the tax, your personal income tax will be affected, companies will be affected. If you increase the interest rates, companies will be affected, personally you will be. So these are things that will affect the private sector mainly. Government sector is not paying any taxes, no? Who is paying? Then payee tax, who is the one who withdrew the payee tax? Is there anyone responsible? You see, payee tax should have given the government income every month. But then you go and remove that. How are you going to pay the salaries of the government servants? So it's a very major problem. But I think as accountants, we need to see how we could discipline the financial and the costing of this country. If we do not give our role, if we do not play our role here, ultimately, I don't think this country will be able to develop in any manner. They will only borrow the money, spend the money, and maybe you have to sell the country to some foreign buyer. So please see that whatever that we do, we will be able to make ourselves felt. We need to ensure that the government will do the right thing. They must follow the right rules and procedures. Otherwise, every day they will want to revive the economy and put more taxes on our society. So please look at this one. So let me once again thank everyone for your presence, especially our speakers and the panelists who agreed to come and speak here and to give your expert opinions to everyone. And I'm sure that this will be well received by everyone. Thank you and all the very best.
Thank you very much, sir. Next on the agenda is the discussion on recently proposal tax reform 2022. Mr. Atula Ranavira, Managing Partner, Ranavira Associates, is a fellow member of the Institute of Certified Management Accountants of Sri Lanka, the Institute of Chartered Accountants of Sri Lanka, and the Institute of Accounting Technicians of Sri Lanka. He also holds honors degree in Business Administration, BSc Business Admin, from the University of Sri Jayawardena. Mr. Ranavira counts over 4 decades of experience in accounting profession. Further, he is a consultant to Ascent Secretarial Consultants Private Limited, engaged in company secretarial services. In addition to the audit practice, Mr. Ranavira has a wide experience in tax, company secretarial services, and in investment advisory and promotions. Over to you, sir.
Good afternoon. Thank you, Mr. Gajendran, for your introduction. Yeah. To continue with the presentation, I will open a PowerPoint presentation. I'll open the PowerPoint presentation. I think everybody can see this PowerPoint presentation.
Yeah, we can
Yes,
see
sir,
it,
we
yeah.
can.
Okay. Yeah. Today, our topic is recently proposed tax reforms 2022. Now, we are conducting this as a knowledge sharing programs conducted by the CMA Institute as a value creation of 2022 year. Right. Now, we'll start the session. Now, first of all, we'll see what made us to introduce these type of reforms, why it is needed. Now, first of all, we'll take a couple of statistics, as Professor also mentioned. We will take a couple of statistics and see what's the current situation.
Mr. Abdul Ranveer, you
We
can't
can't
hear.
hear you. We can't hear you, sir.
I think he's having a problem with his internet, right? Just a minute, I think he will log in now.
I'm very sorry, there was a data issue. Right. Again, I'll share that particular document. Right. I think this slide is visible to everybody.
Yes, sir, we can see.
Okay, then I'll continue. sorry for the disturbance. Now, when we take the tax revenue to the GDP, it has come down from 12.7% in 2019 to 8.7% in 2021. That means now the per annum, we are losing almost about 600 million to 800 million rupees, billion rupees per annum, right? Then budget deficit. If you see the budget deficit, this has badly affected the budget deficit as well. The budget deficit has gone up from 9.6% to 11.1% in 2020. Then 2021, it went up to 12.12%. Then the most important thing is this debts to the GDP. Debts to the GDP. In 2019, we had almost about 87% debts to the GDP. In 2020, it went up to 100.6%. That means it has gone beyond 100. Then in 2021, it has gone up to 104.6%. It's a terrible situation. That means urgent treatment is there, needed, very much needed. Now, as a result of this situation, the fiscal imbalance has occurred. Then the foreign currency shortage occurred. Then poor credit rating has given bad effect to obtain financial facilities from other countries. Now, how to recover these things? Now we know that we are having the big issue. How to recover? The government is proposing, the cabinet, that is the cabinet paper, proposed two things. One is to strengthen the financial consolidation plan, to have a fiscal consolidation plan of the country. That means to increase the revenue and to decrease the expenses and manage the finance in a better way. Then the other thing is macroeconomic stability. We have to improve the macroeconomic situation. And next, which I have prepared, I'll go to the first slide, the technical slide. The income tax. Now, basically, they introduced 4 proposals which relate to tax amendments. 4 proposals which relate to tax amendments. We'll take one by one. First, we'll take the income tax amendments. Then the next one is VAT, then the telecommunication levy, then betting and gaming levy. Under the income tax, first we will cover the personal income tax. They are proposing to change it with effect from 1st October 2022. Now, they are proposing 3 main things in this. One is the personal allowance of 3 million at present. They are proposing to reduce it to 1.8 million a year. 3 million to 1.8 million. Then, at the same time, they are proposing to reduce the tax slabs. At present, we have 3 million slabs. They are proposing to reduce it to 1.2 million slabs. 1.2 million slabs. At the same time, at present, we have only 3 individual tax rates, basic tax rates, that is 6%, 12%, and 18%. Now, they are proposing, newly they are proposing different slabs. First 1.2 million 4%, next 1.2 million 8%, next 12%, next 16, 20, 24, 28, and 32. That means ultimately the maximum tax rate of an individual, the maximum standard tax rate of an individual goes up from 18% to 32%. 18% to 32%. Now, here, they have not mentioned anything about the qualifying payments and reliefs. They have not mentioned anything about the qualifying payments and relief. That means the existing qualifying payments, which is applicable for entities as well as individuals, and the relief, which is available only for individuals, will continue. We can assume that they will continue those qualifying payments and reliefs. Now we'll move under the income tax, we'll move to the withholding tax. This is the biggest mistake, the biggest blunder what the government has done in 2019. Because this withholding tax is a tax where the tax collection cost is almost zero. No collection cost, not like other taxes. Now we'll take one by one. Withholding tax on employment income. Earlier we had pay scheme, then they name it as APIT. Anyway, they are proposing to reintroduce the mandatory withholding tax on employment income with effect from 1st October 2022. At present, this APIT is mandatory only on non-resident persons. But with this date, 1st October 2022, they are making it is mandatory to even resident employees. Right? That means anybody who is getting a remuneration greater than 1.8 million a year or 150,000 rupees per month should contribute to the APIT or pay tax, whatever the name. They will decide the name. Right? Then, the second category, withholding tax on interest and the investment income. On investment income. This investment income withholding tax, they are making mandatory and introducing with effect from 1st October 2022. Now on interest, 5%, dividend 14%, rent exceeding 100,000 rupees per month, 10%. In all other cases, it is 14%. All other cases, 14%. Then advance income tax on dividends, advance income tax on dividend, entire dividends, and the individual's interest income. With related to the interest income, only the individual's interest income will be final withholding taxes. That means if an individual get the interest income after deducting 5%, he need not to pay any further tax on that. His final tax is only that 5%. When anybody, individual or corporate body or whoever it is, receive dividend after deducting 14%, that is a final withholding tax. In the case of rent, what they say is exceeding 100,000 rupees per month, most probably, if you are receiving 100,000, it will be exempt from tax, withholding tax. But if you are receiving 101,000, the whole 101,000 will be subject to 10% withholding tax. Only thing we have to wait for the law. Right. Now we'll continue with the withholding tax. Third category of withholding tax is service payment. Withholding tax on service payment. Withholding tax on service payment, they are reintroducing at the rate of 5%. But it is if a service payment is receiving by an individual. If the recipient is an individual and that monthly amount exceeds 100,000 rupees, that is to be subjected to 5% withholding tax. It is to be subjected to 5% withholding tax. Exceeding 100,000 rupees per month. That means now most probably what will happen, now what should happen, no sooner you reach this 100,000 rupees, the next payment should be liable to withholding tax, but it is very difficult for them to charge the withholding tax on the past payments. Therefore, anyway, they will introduce a mechanism to charge withholding tax even the amount up to 100,000 rupees on the per individuals who are receiving more than 100,000 rupees per month. Then they are reintroducing the senior citizens' interest income. Earlier we had the senior citizens were enjoying 1.5 million interest income relief per annum. They cancelled it because of the other exemptions. Now they are reintroducing this with effect from 1st October 2022. Now most of these things are 1st October 2022. That is interest income on senior citizens. Now we'll move to the corporate income tax. Now, in the case of corporate income tax, as you know, we have a standard tax rate. That standard tax rate of 24%, they are proposing to increase to 30% with effect from 1st October 2022. 24% to 30% with effect from 1st October 2022. Then, the concessionary tax rate of 14%. At present, it is 14%. They are proposing to increase this 14% up to 15% with effect from 1st October 2022. Now, this 15%, they say that if we'll increase it to 15%, it is matching with the OECD recommended minimum corporate income tax rate of 15%. OECD has recommended a global minimum income tax rate of 15% on the corporate bodies. Therefore, once we increase up to 15%, it is matching with that also. Then the income tax rate of 18% on manufacturing and 40% on liquor, tobacco, betting and gaming will continue as it is. Then dividends paid by a resident company to a non-resident person made liable to income tax with effect from 1st April 2023. Right now, the date is 1st April 2023. Right. Now, anyway, all dividends in Sri Lanka should be subject to 14% tax after 1st October 2022. After 1st October 2022. Now, I don't know how they are going to introduce this tax liability with effect from 1st April 2023 on foreigners. Because if a non-resident person receives dividend, anyway, that dividend is also subject to dividend tax with effect from 1st October 2022. When they are legislating these things, they might introduce some type of a mechanism to match these dates. Then that means ultimately, when they say that it is liable, it should be liable at the rate of 14% as the withholding tax rate at source. Then interim period from 1st October 2022 to 1st April 2023, they have to introduce some mechanism to match these different dates. Right. Now, with relate to the corporate income tax, now at present, as you all know, especially in 2019, they introduced so many tax holidays. Actually, can't understand why they have introduced this type of tax holidays. We can't see, sometimes we can't see the rationality of introducing these things. But there's a huge list of tax holidays in Sri Lanka under the 3rd schedule to the Inland Revenue Act. Now, then they are proposing that out of these tax holidays, they have selected 5 items and they say these 5 items, they are removing the tax holidays on these 5 items, they are removing. But they have given, but that removal won't affect. The removal won't affect if we'll start the business on or before 31st March 2023. That is to push the entrepreneurs to start, the investors to start these businesses before this date of 31st March 2023. If you'll start the business on or before this date, you can continue to enjoy the income tax holidays on these 5 items. Therefore, most probably, even they have not mentioned the effective date, most probably effective date should be 31st March 2023. Now we'll see what are those 5 items. One is the construction companies, if they recycle their waste materials and sell those things, they are enjoying 10-year tax holidays at present. That tax holiday, they are after 31st March 2023, any business commence after 31st March 2023, they are eliminating this tax holiday. Next one, in an individual after successful completion of vocational education. Suppose an individual start a business after completing vocational education. Then if he'll start a business like that, then he'll be getting 5 years tax exemption. This tax exemption is also proposed to remove, but this grace period is there. Then 7-year tax holiday, which is available on resident individuals, who are resident persons, not individual, resident persons engage in manufacturing of boats and ships. If a resident person engage in manufacturing of boats and ships, the profit is exempt from tax for 7 years. They are proposed to remove that with this grace period. Unlimited tax exemption on any undertaking engage in letting out of bonded warehouses and warehouses related to offshore businesses. If you are in the business of letting these bonded warehouses or warehouses relating to offshore businesses connected with Colombo and Hambantota ports, then in that case, there's the open-ended tax holiday. Now they are proposing to remove that. Those are the 4 items. The 5th item, 5-year tax holiday is there on construct or install the communication towers and related appliances and technical services thereon. To promote the communication system in the country, they have given this 5-year tax holiday. Now they are proposing to remove this 5-year tax holiday subject to that grace period, right? Those are the tax holidays. Now, in addition to these tax holidays, now the law has given some double deduction on certain expenses. Now, as an example, marketing and communication expenses. At present, if you spend 10 million rupees, under the tax law, you can deduct 20 million rupee as an expenditure, double of the cost. Now, that proposal also, that opportunity also, they are going to seize that opportunity. Now, in future, on marketing and communication expenses, we'll be able to claim only actual expenditure under Section 11 of the Inland Revenue Act. Then they say that they are proposing to revisit the definition of multinational companies and do required amendments. Yeah, that's true, because multinational companies definition is not a complete definition, not comprehensive enough. Therefore, they are proposing to study that and do required changes. Then the last one, making any other consequential amendments due to the above proposals. That means now, when it comes to the legalization level, there may be certain other connected amendments which we should do. Therefore, the cabinet has already approved those things also. Now we'll move to the value-added tax. Now, value-added tax, there are 3 main amendments or 4 main amendments, mainly 3. One is the value-added tax rate increase from 8% to 12%. That is already gazetted with effect from 1st June 2022 and implemented, because minister has the power to increase the value-added tax rate, already gazetted. Then the threshold reduction. Now the threshold in 2019, we had only 12 million a year. They increased it to 300 million a year. Now they are proposing to reduce it to 120 million a year, with effect from 1st October 2022. I think these 2 are very rational proposals. Then next one is the tax exemptions. If you see our tax VAT law, there are so many tax exemptions. Now, a VAT system is not running properly in a country. A VAT system is not running properly if there's a huge threshold, registration threshold, and if there are so many exemptions. That is what has happened to our VAT law. The huge tax threshold and so many tax exemptions. Therefore, they are proposing to reduce, restudy these things, and all unproductive exemptions they are proposing to remove, but they have not given a date. Most probably it will be effective from 1st October 2022. Then, with relate to the residential apartments, you all can remember about 4 years back, about 4 years back, suddenly they introduced VAT on condominium properties. Then, in 2019, again, I think 2019, again, they removed the VAT on condominium properties. Now they are reintroducing the VAT on condominium apartments. VAT on condominium apartments, right? With effect from 1st October 2022. As a result, the condominium apartments will go up, the prices will go up by about 4-5%, because in this 12%, there's an input credit available. You can deduct the input credit. Therefore, the price increase should not be more than 5% effectively. Right. Then removal of zero VAT rate on leisure industry. At present, the leisure industry, any hotel, guest house, restaurant, or other similar business registered with Tourism Development Authority is enjoying 0% VAT rate, subject to a condition. The condition is, out of their inputs, at least 60% should cover with local value additions. If it is the situation, it is 0%, that means they can get the refund of all input credit. Now they are proposing to reintroduce 12% VAT rate. That means 0% they are changing to 12% with effect from 1st October 2022. Then it says making any other consequential amendments due to above proposal. That is to facilitate the legislator to include other amendments required with relate to these amendments. Right. Now we will move to the third tax proposal, that is the telecommunication levy. The telecommunication levy, as you all know, on 1st December 2019, they reduced the telecommunication levy from 15% to 11.25% without anybody's request. As a result, the government lost their revenue by 28% on telecommunication levy. The levy has come down 28%. As an example, in 2019, the telecommunication levy total income was 18.3 billion. In 2020, it has come down to 13.1 billion. Now, they are proposing to increase this up to 15% with effect from 1st June 2022. 1st June. It is already implemented, not really legalized, but already implemented, right? Then we'll move to the fourth category, betting and gaming levy. Betting and gaming levy, they are proposing to change with effect from 1st January 2023. 1st January 2023. Now I have divided this into two, gaming, like casino and all. In the case of the gaming businesses, at present, the annual levy is 200 million. They are proposing to increase it to 500 million. Then in the case of betting, now under the betting, there are two types of charges. One is the annual levy. The annual levy. Annual levy, if you are running a betting business with agents and all, your annual fee is 4 million. They are proposing to increase it to 5 million. If you are running a betting center with telecast facilities, then at present 600,000 rupees per annum, they are proposing to increase it to 1 million rupees per annum. If you are running a small betting collection center without these telecast facilities and all, at present you are supposed to pay 50,000 rupees. In future, it will be 75,000 rupees. These are the annual levies. Now, the next category, there's another betting levy on gross collection, based on gross collection. At present, this rate is only 10%. They are proposing to increase it to 15%. Right. Now, those are the tax proposals what they have given, 4 tax proposals. Now, in addition to that, it is useless to have these tax systems if the revenue administration system is not properly working. Now, in Sri Lanka, the biggest issue, one of the biggest issue is we don't have a proper, or we have systems, but it is not in properly administrated. There are so many leakages in these systems. Therefore, government has selected the main 4 revenue collecting center, that is the customs, IRD and excise department, and they are proposing to strengthen the revenue administration system of these 3 entities. How they are going to do that? They have proposed 2 things. One is technology improvements. The other one is introducing of tax audits. That's a good sign. That's a good sign. Right. Now we'll move forward. What are the overall macro level changes? Now the amendments to the Fiscal Management Responsibility Act number 3 of 2023. We have an act called Fiscal Management Responsibility Act number 3 of 2003. Now there we have government has a big issue, because when the government treasury guarantee are issuing, they can issue guarantees only up to 15% of the GDP. Now our rupee has devalued a lot. As a result, now this 15% is not sufficient at all. Therefore, they are proposing 2 escapes for this. Right? One is they are proposing to increase this 15% to a reasonable level. That is only if this requirement happens as a result of exceptional depreciation, that is the exceptional depreciation of rupee, or unforeseen circumstances, that is to be defined. If it is as a result of these 2, one or two, both, then the treasury can bypass 15% and issue the treasury bonds, guarantees. Then the second thing, escape clause. Now they are trying to introduce another escape clause if these things are happening as unforeseen circumstances. Now in that case, they are not proposing to increase this percentage, but escape clause. Without these limits, you can do that. Now, that is from operational targets and fiscal rules they are proposing. Now, this is with the government level, right? Now, we'll see, to end my session, now we'll see how we are legislating these things, how we are legislating. Now, in the case of VAT, already rate increase already legislated. Telecommunication levy already implemented and directed the secretary to the line ministry to implement those things. They have already implemented. Then already done the implementation. Then third, now except for these 2, all the other changes what they have proposed under 3 or 4 different tax laws and the other things, now they have to amend various laws. Now those amendments should go through the parliament. Therefore, first they have to put these things, this concept to the legal draftman and get drafted the amendment bill. Then they should pass that on to the Attorney General for legal clearance. After getting the clearance, they should gazette the bills, gazette those bills. After gazetting, anybody who is objecting these things can object in the Supreme Court. Subject to those Supreme Court determinations, those are not judgments, those are determinations of the Supreme Court. The subject to those, after incorporating those determinations, then they can discuss that in the parliament, and subject to the parliament different committee level changes, the parliament can pass the legislation. But that is not the end. As per our constitution of the country, just the parliament passing a law won't help. it should approve by the speaker. A law is valid in Sri Lanka only if the speaker signs it. Therefore, it is valid from the date the speaker signs it. Now, I think most probably this time within next 2 months period, all these things will happen because this medicine is, all these operations are very much urgent, right? Then to conclude my session, I have put some of my thoughts. These are my thoughts. Now, we being Sri Lankan citizens, we will pay the correct taxes on correct time. Correct taxes on time we will pay. That is for what? That is to the development of the country. But at the same time, this is a public secret that most of these things happen due to corruptions in the country. Administrative level as well as policymakers level corruptions, especially those two levels corruption. Therefore, just paying tax itself won't help. If we are to get the real result of these tax payments, we may have to, whether we like it or not, we may have to interfere to eradicate the corruptions. Right? I don't know how we can do that, but I personally believe we should involve in these things. Right? Saying that, I took almost 35 minutes. With that, I would like to wind up my session. Thank you. Thanks, everybody.
Thank you very much for your detailed presentation, sir. Next on agenda is the panel discussion moderated by Mr. N. Sulaiman, tax partner ENY. Joining us as panelists are Mr. S. Pereira, Principal, Tax and Regulatory at KPMG, Mr. K. Sivanesan, Tax Consultant and Senior Partner at Amrasagar and Company, Dr. K. Rajabaksha, Managing Director, DSA Group of Companies, and Mr. N. Gunavardhana, Managing Partner at Nitya Partners. We invite you to send your questions and clarification on the Q&A session. Over to you, Mr. Sulaiman.
Thank you, Mr. Kajitran. And thank you to CMA for the invitation to participate in this presentation as a panelist. So I think Mr. Atula Ranavira gave us quite a comprehensive elaboration of what the new proposals are. It has come in as a press release. That's how it has been termed. So going by that, there are several sort of provisions, several gray areas. The impact of it is what we want to analyze in the panel, and of course we will take the Q&A as well. But initially, what I would like to ask of each of the panelists is to give us about a 3 to 5 minute sort of initial thoughts that you have on this press release, on the provisions of any particular area that you want to sort of elaborate that was already highlighted by Atula or not. So starting with maybe Suresh and then Mr. Sivanesan and then Mr. Kulatunga and Nyomar. Suresh?
Yeah, thank you. Good afternoon, everybody. Yeah, so we have seen three changes that are being introduced to the tax system. VAT, as rightly pointed out, has been legal according to the applicable law, has been gazetted now. And then there are changes with regard to the customs duty and the surcharge on customs duty. If I make a small comment with regard to the VAT rate change, it has been affected under the Section 2A of the VAT Act, and you see that there's a scheme in this Section 2A. Section 2A empowers the minister to come up with the rate change, and that gazette should be presented to the Parliament, and the Parliament should approve or disapprove that. And according to the scheme, if it is disapproved for whatever purpose, from the date of the disapproval, for the future it is not valid, but however, the change introduced prior to the disapproval date continues to be valid. So that is the scheme. Now, there is an important judgment in relation to this scheme. The recent case of special GST Act, where there was a, in the determination where it was pointed out, under Article 148 of the Constitution, the full control of the public finances is in the Parliament. So only the Parliament has the power to increase, reduce, introduce changes to the tax system, including the tax rates. So now the impact here is once the rate is gazetted and the interim period where it goes to the Parliament, presented to the Parliament, whatever happens is the discretion of the minister who introduced the change. And according to the scheme, Parliament has no control with regard to that interim period, the rate change. So that was contested, one of the elements that was contested in the special GST Act, where the Supreme Court pointed out that is totally unconstitutional, and one of the reasons why the GST bill was rejected by the Supreme Court. But however, this 2A that was introduced to the VAT Act amendment was not challenged at the right time. So now it is law, there's nothing much that can be done, and it continues to be the law of the country. So accordingly, the rate that has been introduced by the minister is very much valid. And, yeah, so it continues to be valid, but it should be presented to the Parliament in the future. Then, with regard to the income tax regime changes, like Suleiman rightly pointed out, we don't find that in the Prime Minister the website or the Inland Revenue website or in the Finance Minister website. So it's obviously I take that as an indication of the proposal to be introduced and not exactly a very official document. So there's enough room to give our proposals and suggestions, and it may change when most probably to get incorporated into the interim budget. We have to wait and see, or it will come by way of a different bill. Right. So when you look at the income tax, what do we see? Is there a restoration of the status quo? Are we going back to the pre-2020 era? When you do a deep analysis, you can see if that is not the case. Just like in the VAT also, the 8% has been increased to 12% and not exactly to the 15% that was there earlier. And when we analyze the income tax changes also, I will start with the individual taxes. That's the most important or the most interesting thing for most of us as individuals. We can see we had this low tax regime where after 2020, so that's basically a period of about 2 years plus 9 months. Compared to that, the changes due to the threshold reduction or the change in the threshold, the rate changes, and the slabs changes introduced to the slabs, the cumulative result that results in the final tax liability of an individual who is getting salaries, let's say, I'm looking at profits from employment, compared to the 2 years and 9 months plus, yes, there is a tax liability increase. But however, the increase that we will see after 1st of October, according to this proposal, is very much lower than the individual tax liability that prevailed prior to 2020. If I give you an example, during the, I will call it the honeymoon period, basically where the taxes were reduced, so that is our period after, immediately after January 2020, up to 250,000 profits from employment, there was no tax. But now up to 150,000, there is no tax, but from 150,000, the taxes commence. So a person who is getting, let's say, 160,000 by way of profits from employment salary will have to pay 4,800 rupees as a tax. The person who gets 250,000 to say 48,000 as tax. But earlier that tax was not there during the last 2 years. But a person who received 2.5 lakhs as a salary, under the before January 2020 period, paid. Sorry, person who get 3 lakhs paid 36,000 as the taxes, and after October, that person is paying 96,000 as a tax. Just one minute. So anyway, what we see is basically the across all salary scales, right? So going up to, I think you calculate about 8 lakhs. What we see is the individual tax liability increase in relation to salaries, the profits from employment, is lower than the taxes that we paid before 1st of January 2020. So that's something that we have to keep in mind. So we don't have restoration of the status quo or going back to the January 2020 tax liability scheme. Right? So that's something we have to keep in mind if this same thing gets implemented. And right, so the question whether there are certain things that we have to be mindful. Now this is all that we have seen in relation. We don't know whether these are the only changes that will come. As I said, these are basically, as I take the only indications of the intention of the government to introduce changes. Main thing is, okay, we, as you all know, basically the Amendment Act to the Principal Act introduced expenditure relief. There is an important one in relation to investment is listed company shares, treasury bills, or treasury bonds. And that is deductible as qualifying payment, or what we call the expenditure relief. So as individuals, we have to make a call now whether if we want to reduce our tax liability, whether we should purchase or invest in shares after October or before October. Normally, when the rates are increasing, it's always makes sense to push the expenses also to the high tax rate period. That means after October. So basically, buy all the shares you want to buy after October, so that that will go on to reduce your tax liability later on. But we don't know whether there will be an amendment introduced to the expenses relief also, though there's no indication now. In which case we may not get it. So in that case, we will have to decide whether we should buy the shares now and use it while it is available as a relief. So these are some tax planning things that we need to we can consider, because we have been given the indication this is the taxes are going up individually. So this is a period that all of us must start looking at impact analysis, tax planning, etc. Because we know mid-year there is going to be a tax rate changes there. Not only for individuals, even for corporates, this is the time. Since we know the taxes are going to go up, that we need to take steps to be tax efficient. Right. So apart from that, apart from going back to the pay system, as Mr. Ranavira pointed out, we are going back to the withholding tax regime also. In other words, the reduction at source is going to be mandatory also. Now that from the point of view of the tax collection tax administration, it is a welcome move. So that reduces the opportunities available for tax evasion. And what do we see there? We are going to see again 5% final withholding being introduced in relation to banks, interest from bank deposits, and also dividends. So the indication seems to be that if a person has only salary, interest, and dividends, he may not be required to file a return going forward. But in relation to year of assessment 22-23, since 6 months have been under the self-assessment regime, I think 22-23 return, everybody will have to file, but going forward from 23-24 year of assessment, there may not be a requirement for the people who are working in the mercantile sector who's getting only interest, dividend, and salary to file a return. I hope that is what the direction is that the government is trying to do. Right.
Suresh, can we come back with questions? We just get the views of the other panelists. Also, there are quite a few questions to go through, if you don't mind. Mr. Sivanesan, just quickly, initial thoughts, 3 to 4 minutes.
Yes, yes, Suleiman. Thank you for inviting me as a panelist. So I just want to elaborate certain points as an overall comment and the certain specific comments. The first I would like to say, so actually everybody understand that the government revenue has come down drastically. But we know now the individuals are very much, for them it's very tight period now because of the inflation. It's almost the cost of the foods gone up by 100%. I think it's doubled. So if you look at the employment tax, when I worked out each remuneration level, like a 200,000 monthly salary or 500,000 monthly salary, when you take it up that plan, the proposed increase is more than 100% when compared to the present scheme. So therefore, when look at that, so apart from that, technically the tax-free allowance are given based on the living expenses. But here what has happened was our cost has gone up. The living expenses have gone up by double. But the tax-free allowance has come down from 3 million to 1,800,000. So therefore, I think this should have been actually, as President also mentioned, the rate should not have come down. But now the present situation is, I think the people are very tight with the inflation. No? So at this stage, taxing for the employees, especially the individuals, more than double. No? So that's an additional burden for the employees at this stage. So other one is basically most of the income tax amendments are brought up from 1st October 2022. So therefore, obviously, when you are doing a tax calculation, so you see that you have to divide the period, the first 6 months and the final 6 months. So same thing we had in 2019-20 also. Chairman, I think you must be knowing that 2019-20, the first 9 months and the last 3 months. No? There was a division. So then there was a guidelines issued by the department also through a Amendment Act. So they say you go on a pro rata basis. But the Amendment Act came up after furnishing the return for 2019-20.
Yeah.
So therefore, I think the department should act upon immediately, no, at least giving a proper guideline through the enactment. So we are going to proportionate this particular profit for the purpose of taxation. No, otherwise generally the changes should happen from 1st April, especially income tax. Another my comment is, I think everybody agree with me that our present one of the main crises is the dollar crisis, the dollar inflows. So in that context, this particular announcement or pronouncement has no proper tight or proper plan for inflow of the foreign currency. So I think they could have sometimes exempted the whole foreign currency income for export, at least for a shorter period, to cater to this particular demand, or even a service income. regardless of whether consumption is outside Sri Lanka or not, it could be zero rate. And also, I don't know whether we can have an effective amnesty system, at least for a certain period, at least for 3 months, like, no? Because you have to have a big inflows to cater to the demand, right? So if you don't get enough investments, I think that's only one of the options we have to look at. So then the tax-free allowances come down, but as Abdullah said that there's no proper clear indication about the personal allowances of 1,200,000 personal relief, 1,200,000. So in lieu of the making a APIT compulsory, so if anybody can claim this personal relief, 1,200,000, unless you go for a direction, unless you introduce a direction system, I think all the employees should start claiming the refund, no? So that become a administratively burden to the tax department. So like earlier we had a PAY scheme, the direction system.
Yeah.
So that is the reason, one of the reasons that that time the government has removed that direction system, right? So made it very straightforward, the PAY to be final tax. So now we are giving relief, the personal relief, having this APIT compulsory. So we'll have to look at that part, how we are going to handle it. Then withholding is made it compulsory now, all the AIT and the APIT. So therefore, I think we'll have to make sure that how the section 10, subsection 2 of the Income Tax Act, whether they want to remove that requirement or not. Otherwise, the taxpayer should comply the requirement very strictly. Otherwise, the department can have a position where if you don't comply with withholding tax provision, the total expense should be disallowed. No? I think a lot of certain clients also got this assessment for 18-19. Just because withholding tax has not been deducted, the whole expenses are disallowed, right?
Correct.
We'll have to see whether how we are going to do that part. The other one is, I think when you come to introducing the withholding tax system, one of the problem under the new act was in 2018-19, you made withholding tax compulsory, but there was no direction system especially for the losses, exemptions, lower tax rates. I think if you are making a direction, the withholding compulsory, I think you have to have the direction system for a loss-making undertakings. Otherwise, what will happen is basically we have because once you not make the introduce the direction system, then withholding become a refundable for most of the taxpayer. Yeah. So then the department is unnecessarily arresting for asking for information for the refunds, no? So that is always, I think we come back to a lot of difficulty in 2018-19. Then finally, there are two more proposals. The corporate tax rate has gone up by 24% to 30%. So, and dividend tax is still 14%. But this is, the dividend tax is basically the duplication. I think because when an individual does the business through a proprietorship, his final tax liability is proposed to be maximum 32%. When partnership also, though the partnership pay tax 8%, with the individual partners, maximum rate is 32%. But when you do a business through a corporate, the corporate pay the tax at 30%, but that corporate will transfer the profit to the shareholders. The shareholders have to pay another 14%. So when I looked at when you have 100 million profit, when you have tax at 30%, the 70 million balance profit when you distribute as a dividend, 14%, the effective tax rate to the shareholders is about 39.8%. That is almost 40%. So I think that's something more than what we had that time. Therefore, whether we don't know whether we'll have to introduce like a imputation system that we had some time before. The imputation system, the corporate paid the taxes, some of the tax paid can be given credit to the shareholders as imputation credit. So that's otherwise your dividend tax rate should come down. The earlier we had under the previous act the 10% rate. Correct. So that is one more point. And finally, the VAT exemptions, they are going to remove on the condominium property. So when you are removing from 1st October 2022, so you have to also mindful where the existing project, Yeah, some of the cost, most of the cost has already been incurred. Yeah, the projects are not claiming input taxes. So when you're going to make them as a liable going forward, no. So then there will be a problem for existing project. How we're going to charge the money? Of course, they might have an agreement to charge the 12% rate from the customers, but otherwise, if would have got to know that one earlier, they would have increased the price only after claiming the input tax. No, so they would have costed properly. So maybe if you have an input tax claim, when you claim it, so the balance part all you can charge it to the customer. Not there won't be increase of price by 12%. I think we had some time before also, for 3 years before, when they charge that on the apartments. I think there was a scheme. When you sign the agreement prior to that date, there won't be a VAT, something like that, right? I think that sort of a scheme has to be introduced. So that's all. Thank you very much.
Thank you, Sivanesa, for those. Dr. Kulatunga Rajapaksa, can we have your initial thoughts on the presentation?
Yeah, good evening, everybody. Well, since most of the areas are covered by Mr. Suresh Pera and Sivanesan, I have very little things to add, but as a taxpayer, the corporate tax, I am coming to the corporate tax. Now, there's a change in the tax rate from 1st October 2022. Now, this means those who are preparing taxes, they will always, the tendency would be to show more profits before the October and show less profits after October, because there are two different calculations. So this will definitely happen, and you are opening this one to the malpractices in the sense tax department will observe very high sales in the month of September as against October. So this is not going to happen. And also this is another burden to us, because normally the tax planning is done for the financial years. When you do this, even before 2019, similar thing happened with 9 months and 3 months. This time also 6 months to 6 months. So that means you have to prepare tax planning for first 6 months and second 6 months separately. So that's additional cost to the corporate sector at all, corporate sector. Then about the marketing and communications, earlier there was the advertising was disallowed, and so later it was allowed only disallowed by 25%. But this recently they allowed double relief on marketing, because they thought the marketing was an important item. So for some reason this has been removed now. So they are allowing, they won't, the double deduction is not allowed. So you know, for what the reason, of course, I don't understand, because now the situation is quite different. The environment is completely different. Then again, for the senior citizens, they have brought this 1.5 million relief. It is not very clear this applies for the first 6 months or the whole 12 months. It's not very clear. If it is 6 months, that means only the relief is only 750,000, because they say the effective date is 1st October. So that means it should be 750,000 only, the relief for the senior citizens, as mentioned. That's what the understanding that you have. Then they have mentioned about the interest, the withholding tax of 5% on interest, 14% on dividend, and 10% on rent. And all the other taxes 14%. Now, in somewhere they have mentioned, once you deduct interest 5% on fixed deposits and dividend 14%, that is full and final. But they are silent on the rent. With the rent 10% they are deducting. After deducting 10%, will that the income on the rent, will that be full and final? It's not mentioned very clearly. But in the case of interest and dividend, they have mentioned is full and final. So that's an area, that's a gray area. Then other thing is, you know, they have reduced the VAT threshold from 300 million to 120 million. 300 million, 120 million means, that means 10 million a month turnover you have to pay. But we must understand that due to the inflation, almost all the consumer goods have gone up by 100%, almost everything. So therefore, this 10 million per month turnover effectively is very much low now, because all the prices of consumer goods have gone up. And as Mr. Sivanesan mentioned, the personal income tax also, because of the cost of living has gone up, this reduction is rather serious now. It has brought down from 3 million to 1.8 million threshold. So that means the taxable income of all the salaried personnel is a fairly big cost for them. Then apart from that, the pay system that was before, it was very well established. It was working very well. I do not understand the reason that have been removed now. So it have been reintroduced again as EPIT or as PE. So that means in a way that's good, because the tax deduction from the salaries, especially when we have a large workforce going high salaries, this is very easy for us and easy for the government also. It's the monthly revenue. So it have been withdrawn earlier for some reason, but now it seems that it will be introduced from 1st of June, 1st of October. So from 1st of October, there will be a tendency to every company to pay bonuses and everything by September again, without waiting for
the December.
October. That is going to happen again, because that may be a request from most of the employees to make the payments in advance, so that they will be qualified for overtax. These are the few things I had to mention. Then there's another item mentioned, the corporate tax. They said the manufacturing is charged at 18%. So that is not very clear when they mentioned that the tax is from 24% to 30% they have increased, but they have separately they have mentioned for the manufacturing sector that the tax is 18%. So I don't know whether Mr. Atul Ratna can clear on that. There's a separate item mentioned that for manufacturing is 18%. So that we don't understand much about it. So that's all I have to mention. So if there are any questions, let us come.
Thank you very much. So it's manufacturing rate currently is also 18. So I think there will be no change for manufacturing.
No, when you say corporate tax, corporate have been increased from 24 to 30%. So the manufacturing industry doesn't come under corporate or what?
Manufacturing was 18 in the old law also. Current law is 18. It will continue to be 18 is what it looks like.
So what do you mean by the corporate tax have been increased from 24 to 30%? The manufacturing company doesn't come under corporate?
No, they have a special.
Presently, can I?
Yes, please.
Presently, doctor, now the corporates are general rate is, what they are saying, the general rate is 30%. But if a general rate includes, any corporate includes the profit from the manufacturing operation, even currently the tax rate is 18%. Therefore, if a corporate has some manufacturing profits, so then you tax that part is as 18%. The other income, other profit, you can tax at 30%.
That's right.
Okay,
thanks. Nyomal, a few initial comments on the proposals, please. You're on mute, Nyomal.
Yes. Yes, hi. Thanks, Suleiman. I think I just, since all the details have been dealt with, I think I'll deal with some more general points. I think, first of all, I think the importance of this principle-based laws on tax. Now, in 2017, we had a principle-based tax act, an Indian Revenue Act. And then I think it's important that, and we also had various principles on, let's say, withholding tax, which were well established over a long period of time. Now came 2020 and we ditched all that and then went into quite a different scenario altogether. And I think what it says is, if by some chance we deviate from principles, those are not sustainable over the medium to long term. I think that is the final conclusion which can be reached. For example, now what happened was that foreign dividends was not going to be taxed. So what happened? Various structures were done in order to enable structures were created so that foreign dividends could be taken out directly without the incidence of tax. Now, I, for one, was always skeptical that that could ever be maintained over the medium to long term. That was never something which could be maintained in the medium term. And eventually now that has gone out. Now, what happens to all those structures, right? But even foreigners, I don't think can complain about that because those things like that were unsustainable in the medium term. So I think that is one lesson which we can learn. And secondly, I think there can be no doubt about who was responsible for the loss of revenue to the government. But let us not forget one thing, that you and I were the beneficiaries of all those reductions. So therefore, there can be no doubt about the fact that we had subsidized energy, right? We had food and beverages at lower cost and the like. So therefore, the beneficiaries were definitely us, ourselves. So I think in the context of what we are now being asked to pay additionally, I think we may need to look at it in that context. For example, I think we were talking about personal income taxes. At a 350,000 income level of taxable income, the person will still only pay 350,000 rupees a month. According to my calculation, he'll pay 12,000 rupees a month as income tax. Now, I think that is definitely something which is payable, right? And I think it's something which should be paid. It's not excessive, taking into account the circumstances in which we are now. So I think everybody at high levels, and at high levels, remember, taxes would go up maybe even by up much as 200%. But that is something which we may need to eventually figure out. The third thing which I need to just point out is that the proposals speak of 292 million being additional revenue for the year, 292 billion. Out of that, 156 billion itself is coming from one single proposal, namely the increase in the VAT rate from 8% to 12%. And 70 billion of that, which is also about 1/4 of the total, is coming from another single proposal, the increase in the corporate tax rate from 24% to 30%. So therefore, that gives us a general idea about from where taxes can be collected. And the fact that all these other references ranging from personal income tax to withholding tax, for example, personal income tax changes is expected to bring in an additional 20 billion, and withholding tax is expected to bring another 20 billion. But taking into account the fact that VAT itself is going to bring us 150, the rate change only, mind you, the reduction in the threshold from 300 million to 120 million is going to bring another 15. So eventually, fact of the matter is that most of these tax burdens are eventually going to be borne by the public at large. Whatever anybody may say, these are VAT changes eventually, right? 55% of the change or the additional revenue is coming from VAT. So those are the observations which I have. With regard to qualifying payment relief, I think, as I think Mr. Sivanesan clearly indicated, I think eventually we might need to go back to only housing, right? There were qualifying payment reliefs given for absolutely unnecessary things like purchases of stock on the shares on the stock market, right? You can buy a share today and sell it tomorrow, and you get qualifying payment relief, right? Which is totally inexplicable, right? So therefore, we might have to eventually be satisfied with only, I think, housing, if at all, or maybe nothing at all. Thanks, Suleiman.
Thanks, Nirmal. But housing at one time wiped out your entire taxes in the old law, not anymore though. The capital also was allowed as a deduction, I think, at one time. So, but at least it goes to a worthy cause where you are able to afford your house without paying taxes. Right, so we'll just take a few questions, and then we'll go to the Q&A as well. So one thing that came up, maybe Suresh, you can take this, is that the increase of 8 to 12% in terms of VAT, and several retailers have this issue where what is already in stock. So if, let's say, a manufacturer sells to a retailer, they have a MRP, and then now the supermarket, for example, has bought it at 8, which has the MRP, and then now they need to sell it and pay 12. So who takes that hit in terms of the 4 becomes an issue, and whether MRP is it a legal requirement, or is it a contract between the parties which the supermarket can actually go above and sell to recover this VAT? Any thoughts? You're on mute, Suresh.
Normally, when there is a tax rate change, we have these transitional issues, but then in this instance, basically it's the output rate that has gone up from 8 to 12. So I don't see many transitional issues coming up because of this change. So the issue is basically, okay, you have purchased at 8% and now you are going to collect to sell it at 12%. Is basically that's a law basically. So you have to, when you're selling it, you have to collect the 12% VAT and file the VAT return. So you have.
So the question is, can the MRP be breached? So if you have let's say you have 100 rupees, let's say a price of Coke is 100, it's marked, and that has it's marked based on 8% VAT. But the supermarket has bought it.
MRP, if I recall correctly,
basically
VAT to be, I can't often answer this one, but I think MRP, that could be excluded in deciding the ARP if I'm not mistaken, right? But I think I may not be wrong there.
MRP is a legal requirement, so you can't change it.
You can't change
once you fix the price, legal.
Right.
Okay.
Shall I add one more point?
Please, yes, please.
So I think the section 5 of the value of supply rule, when they introduced the supermarket VAT, so there was a provision where the MRP can be adjusted.
Okay.
Under section 5 of the VAT Act.
Right.
Question whether
excluded, no?
the provision is still there, then that can be done.
Okay, so even if it's 100 rupees, then you can put the 4 rupees and charge 104 to
because of the increase of VAT rate.
Right.
So that can be adjustable.
Yomal, any thoughts on that, or whether it's a legal or it's a binding thing to stick to the MRP? You know?
Yeah, actually, I didn't know about this section 5. I always thought that MRP was a legal requirement and you couldn't possibly set it above that. As to whether the CA, Consumer Affairs Authority, would take action or not is another point.
Right.
If by some chance administratively they decide for the existing stock that no action is going to be taken, I think that's a different way of dealing with it.
Right. Okay. Thank you. Yeah, in addition to that, I think the point was raised by Sivanesan, and I put that down as one of my points as well, is that our dire need at the moment is an increase in foreign currency to help us buy food, fuel, gas, and so forth. And these provisions, so our issue is twofold. One is we have a lack of foreign currency reserves to import our essentials. And another, we also have a issue in terms of a lack of income to pay salaries and domestic expenses as well as a government. So whilst these do take care of the second issue, I also don't see any provision that will really help drive foreign currency growth in the immediate term. So I just want to see if any of you had any thoughts on, whether we can suggest in this forum or have an open discussion whether there are certain provisions we could suggest in terms of, helping in coming up with some policy to increase foreign currency in the immediate term from a tax policy point of view, how we can sort of maneuver tax policy to ensure we have a flow of foreign currency coming in the immediate term. I think, Sivanesan, you mentioned a few items.
Yes, what I mentioned was basically whether it's possible, because the exporters are now taxed for 15%. So whether the exporter can be exempted for a certain period, no? So that for them to
provided they probably increase exports, no?
Yeah, that's
not
right. Yeah,
if they can do it or in years or something like that, give some incentive to really drive export growth.
And also some service income, the zero rated was given where the consumption is outside, no? But to make flexibility on that particular requirement, no?
That's right.
Whether the consumption is outside or inside, that doesn't make a difference when you receive a foreign currency.
Correct. And also to ensure that it comes through a bank, although that's in the law. Currently, I'm not sure, even in the monitoring, there's so much the IRT can do in terms of, looking at whether those conditions are met, carrying out immediate, checks and balances, whether those laws which are in place are being implemented. Because half the revenue is probably outside, but still there you get a zero rating. So whether, assessment should come or it should start, especially in those lines when the law is already there. Any other comments on suggestions to increase foreign currency? I thought we'll just spend a few minutes in this forum to see if we can suggest something that will probably come up in the policy.
One thing is whether we can see that the foreign currency comes into the country. Now, we may have
Yes.
exports, but
Yes.
whether we can suggest some tax exemptions for foreign currency coming in. I think that might be a good way.
Yes, that's interesting, Professor, but they brought that into the law, I think last year or previous year, into the income tax law as well as the VAT law, I think says within 6 months it has to come. So it's in the law. But whether it's implemented is the question. So the proper checks and balances need to come in there. Income tax also now they brought in the rule. It's not only an export, you need to bring it through a bank. So both those are covered. It is the implementation that I think is stalling a bit.
Yes, that is the implementation not done. The foreign currency or all exports should be brought in within 180 days. But
Yes.
that monitoring part.
You're on mute, Dr. Kulat.
Yeah. Now the law is there that they should bring in the proceeds within 180 days. Unfortunately, the monitoring part is not done. So I think we can even think of paying an incentive those who bring the foreign currency less than 180 days. That's another incentive that can be brought in. So right now they wait till the 179 day to bring it. But if we ask them, so in the same way as we do the cash discount, if they bring in the export proceeds within 30 days and 60 days, and additional incentive or something like that, that would be definitely encourage the exporter to bring in the proceeds.
That's an interesting point. Certainly, yes. Any other thoughts, Suresh or Nyomal?
Yeah, I think right now in the 2017 Foreign Exchange Act also, the amnesty that was introduced for bringing money parked outside Sri Lanka, it's still valid. But there was a doubt with regard to that, whether the taxes will be pardoned, though there is a very generic statement in the Section 8 of the Act to say that all taxes, levies and duties will not be charged. Maybe to strengthen that or whatever.
Yes, that's still open. Yes, so that's another option also.
Yeah, but the practical situation is we have to look at it a different way to incentivize or to basically people to bring the money. It's there are other things that are also involved.
Correct. So one more point, which I think the central bank governor mentioned this, where if you are giving an incentive, it should really help the economy, right? If it's not helping the economy, why incentivize a particular sector? And he was talking specifically from the area of foreign remittances, right? They are given a duty-free facility when they do come, but the money isn't coming through the banking channels. In which case, should the incentive, are they entitled to the incentive, for example, whilst we pay taxes on our salaries, they don't pay taxes, even though there may be ways to tax it. Any thoughts on that segment, whether tax policy should be used to actually help benefit the formal economy in that segment, given the current law where residency, the rule of residency is actually very wide, not merely 183 days, but much more wider, which can capture a large audience. Any thoughts on that?
Yeah, so right now we have a rupee shortage as well as a foreign currency shortage. So it's not only the foreign currency that we should be focusing on. And so right now the approach seems to be everything happened because of the 2019 tax cuts or rather the main element. So let's go back to the pre-2020 era, then the tax policy will be correct. So that seems to be the thinking. But considering the circumstances, I think sometimes the perception that we should go back to the pre-2020 to remedy the situation is not the answer. What we should do is have a short-term policy and a short-term policy in relation to the taxation, maybe 1 year or 2 year policy to immediately come out of the rupee shortage at least, or if possible, the foreign currency shortage. And thereafter have a separate tax policy for the development of the country. So right now, the tax policy is should not be development oriented. This is the survival oriented. So how do you collect the taxes without, as Dr. Kulatunga pointed out, harming the general public? So that's what we should be looking at.
Right. Okay, so it's if there are any other views, please bring it up. I'll just move to the Q&A now, where we've got quite a few number of questions. The first one, interest income on FD for individuals is 5%, WHT is final tax. What will be the treatment for income on treasury bills and bonds? Mr. Atula Ranavira, so currently the earlier law, if you're bringing the earlier law in, there was no withholding for treasury bills and bonds because of the notional tax issue. I don't think there is an indication likely that they will bring it for TBs as well, Atula.
Yeah, I think the way they have now at the time of legislation, I think the best thing is to introduce this withholding tax on both. But the problem, the treasury bills, now as it is the government money collection, they have not introduced the withholding tax because anyway, the government money ultimately. But I think for an effective tax system, better to introduce withholding tax even on treasury bills as well as all other deposits.
Right. And that will be a final tax, right?
Yeah, it should be a final tax in the case
company?
of an individual. For companies, it should that income to be included into the taxable income, calculate tax and deduct give the credit for the withholding tax. That is what's happening.
So another question, Mr. Sivanesan, if you can take this. Interest is tax deductible while dividends payable on after tax. What is the logic in proposing a final tax of 14% on dividends while 5% on interest? Wouldn't it shift savings from productive corporate investments to pumping into inefficient bank, making trading more profitable?
Yeah, the point here is what they have made it. The dividend tax is 14%. I think little bit of high, I believe, compared to the interest, because technically I can remember that sometime before the previous act, the dividend and interest both paid were always same rate, the 10% rate. So that should be the basis, because the investor's point of view, whether investing in a deposit or in a shares, no, that is the investment. So the rate of tax should be same. And also you have to mindful there should be other way around. The dividend tax should be lesser than the interest. The dividend, of course, as I mentioned, when you are taxing the dividend, it's a double taxation.
Yes.
The corporate profit gets double taxed. But
So
yeah, what
that's
is
the point
happening
here.
is,
Yeah, that's the point here. Why 14 for dividend when it's already taxed?
yes. So therefore, it's a little bit of high, I believe. At least that should come down.
Right. One more, Nyomal, if you can just look at this. So there is a final withholding for interest of 5% is what is proposed, and dividend 14. I think it's final is what they've mentioned. The question is this prudent given that those in higher slabs are currently paying 18% on both of these at the moment? Why do you think they're trying to bring it down when it's being charged at 18% at the moment?
Yeah. So I think this is a particular point for obviously the people, high net worth individuals, because the fact is that their general rate of tax on other income is going up almost double. So therefore, that is being offset by some reduction in interest income. But also the fact of the matter is that interest rates are at all-time high. So therefore, people can also afford to pay more tax on their interest income as well, because interest rates have gone up by more than double. So I think that is one of those areas where there is a higher tax on your general income, normal income, but offset by a low amount of tax on your interest income. So I think that's, I don't know whether you call it anomaly or not, but the fact that passive income is subject to final withholding, I think is a principle. So whether it be 5% or 10% or 14%, I don't know. But I think the principle that there should be a final withholding on passive income, I think as a principle, very especially at individual level, I think that is something which is commendable.
Right. So I think, yeah, the principle is that if you put 5% flat, everybody, even who was not liable, that means within the new 1.8 billion threshold also has to pay the fine, including the guy at the highest.
So, yeah,
So
that is a,
revenue might be much more, but whether it's fair is the question.
no, that is, I think, even Sivanesan pointed out, when there is a withholding mechanism, whether it's the payee or in investment income, there should always be a direction mechanism. Withholding mechanism and the direction mechanism should go hand in hand. Under the old Inland Revenue Act was there, but when the new Inland Revenue Act was introduced, even with effect from 1/4/2018, withholding mechanism was there, but the direction mechanism was taken out. That's why many inconveniences were there.
Mr. Sivanesan, they also mention, they talk about 5%, 14% per dividend, and any other payment at also 14%. Would this mean services would be 14?
No, that is, I think, the foreign remittances, of course, that's become final withholding. As in the present,
Yeah, no, at the end, it gives a 3. Sorry.
It's I think the other payment, like a rent payment and everything, I think it's not a
the
final.
rent is, it says rent
that may not be final. That may not be final.
Yeah, so any other means, only thing I can think of is services and royalties. Does that mean local services will now be 14?
Rent payment and a professional service payment, no?
Will be 14, you think, is it?
No, that's 10. Other things must be a dividend.
Dividend for separate.
Royalty, natural resource payments.
Yeah, no, this document says, it says interest is 5, dividend is 14, rent is 10. And there is a D. It says in all other cases, 14%.
It is a royalty.
But would you think if service payment comes, it will be a big problem if there is no.
Yeah, that's correct. No, I think they are going to bring it in 2018 situation, not the original.
Yeah, looks like. So if it's 14, it's going to be horrendous.
Yeah, that's correct.
No. How about the brokerage? That's also coming as other payments, no?
Yes. Anything else? That's the worry. Yes. That's a very high amount.
Means share brokering also coming in there.
Perhaps any other means, everything else will go. Yeah. So you might have to watch out for that. Yeah. Right. There is another question. As a company, we are getting rent income as our business income. Atula, maybe you can take this. In that case, does our tenant need to deduct 10% on their rent payment? Even if it's business income, you have to deduct. Is the question.
Yeah. The way they have announced, the way they have proposed, I think even it is a business income, we have to withhold that 10%. Yes. But I don't know at the legislation level they will change it. But with the current wording, it looks like that any rent payment, which is about 100,000 rupees a month.
Yes.
Will that be full and final?
No. Full and final is there only on 2 items. One is on dividend on any receipt, any person. But on interest income is the final only in the case of individuals. Only those 2 are the finals.
That's but in the case of rent for individuals, this is full and final?
No. You have to include that rent income into your tax computation, taxable income, calculate the tax and give the credit for the tax what you have already paid.
Correct. Both individuals and companies.
Yeah, and in Sri Lanka now, in addition to these 2, locals, we have another withholding tax on that is gem and jewelry auction sales, 2.5%. That is a final withholding tax. That means there will be only 3 final withholding taxes in future.
Yes. Dr. Kulatunga, just one question on this rate increase. Now, individuals, as you know, has gone up maximum rate from 18 to 32, close to doubling of it. How do you think this will affect businesses, entrepreneurs, and then those actually in the key sectors who are earning a foreign currency like IT, exports, and tourism. So not only are they getting hit by, or is there competition from overseas markets where salaries are now doubled because of the depreciation of the rupee? They have to now pay higher tax as well. Would this amount to a significant brain drain? Is this policy suitable at this moment? Should it be managed in some other way? Doctor?
Foreign currency, income from foreign currency, the tax department is silent on that now. Whatever the income that you get in foreign currency, earlier it was tax-free. I don't know, this time it is totally silent.
It's still tax-free. It's still tax-free. My question is on the individual salaries. So those who are working in tax-free companies or those companies that are earning dollars, like exporters, will now have to pay from 18%, their withholding or their tax is going to go up to 32%. In the context of the current devaluation of the rupee, where foreign salaries look way more attractive than ours, and you're getting double hit with a higher tax, the impact this will have on local businesses retaining talent is the question, if you want to add some.
Whether you are an export company or local company, if the workers, if the employees are Sri Lankans, their salaries are paid in rupees, so naturally they will fall in the normal tax level. The income will increase of the company, income will increase because of the parity increase. But still for all the employees who are being paid by rupees, will have to fall in line with the new tax rate.
Yes, that's correct. The question is it prudent to go from 18 to 32 and risk losing the cream of people that we have to foreign jobs? Or should this revenue be, for example, we should retain it at maybe 24 and maybe increase VAT or increase corporate tax to collect this? Any other thoughts from anyone else?
Yeah, I think I might add, I think at some point of time, I think this has to be dealt with bluntly. Because this category of workmen are willing to go to Australia and pay 50% tax, or migrate to Canada and pay that amount of tax. Whereas they wait in Sri Lanka and they want to be taxed at these rates. Exporters are better off now with the devaluation than they were before, right? They are very quiet about it. Nobody is talking about it. They are very quiet about it, but they are better off. Right. So therefore, they should be able to afford higher salaries and all that, maybe dollar-linked salaries or whatever it is, in order to compensate that category. But I don't think these people anybody should be coming around and saying, right, I'm migrating because the tax rates are high. In which case, I think bluntly, somebody should be told, yeah, go, maybe Australia is beckoning you at 45% or Canada is beckoning you at whatever those rates are, right? Which I think that blunt answer needs to be given.
I think I am also agreed with Australia tax rate is over 45%. Right? Very much higher than Sri Lankan rate, even the proposed rate is very much higher.
Yeah, I totally agree with Nimal and Dr. Kulutunga, because now some of these IT entities, what they are doing, they incorporate another company in between. Like in Dubai, nowadays a lot of people are moving to Dubai to start a business because they are giving 1 year visa at once at a very low cost, and a lot of people are moving. They go and start another business in Dubai. Then the Dubai company offer the employments to the local employees. Then the local employees are getting the remuneration from Dubai. As a result, that remuneration is 100% tax-free. Because what it says is export of services. And the export of services on the third schedule, it is exempted. Then most of these IT companies, the employees are, they are handling the employees like that. Ultimately, they are not paying. They are well off.
Right. Understood. Yeah. Right. Another question on the Q&A. Any CGT reforms in this? No, I think CGT rates are stable, right? At 10, I don't think there's any change there. Is there any requirement to get re-registration for those who not falling to previous VAT threshold of 300 million? Yes, if you exceed the 120 million, you'll have to register again. Um,
I think there's a most question on that area, whether they're asking if it is already deactivated or deregistered because it's below 300 million. Whether they have to do it again if they exceed 120 million or
yes,
by
yes.
voluntarily.
But after 1st of October, but even now voluntarily they can, right?
Yes.
Even now
But they're asking
voluntarily.
if it is their turnover is above, say, example, 200 million, are they need to make any fresh request to register them, or they can use their original registration?
No, they have to re-register. If they were deregistered, you have to re-register.
No, what he is asking is whether we have to apply or the IRD will automatically do that.
They won't know, no? You'll have to reapply.
Yeah, we have to wait and see. Most probably we may have to apply it. The responsibility is with the taxpayer.
Right.
The only thing is, because of this 1st October date that they are given, you may every time we request the IRD to make the tax return simplify the tax system. This one again they are making complicated because now we have to prepare virtually two returns for 6 months and
like last time. Yes.
Yeah, so that makes very complicated. Certain apportioning and all that makes very complicated, right?
So there's a rate on this apportionment that we just brought up, Suresh. They're asking, do we need to proportionate estimate tax computation on half-year basis for 22-23? So it's coming in August 15th. You will have to do the estimate. But that estimate. So which year this will apply to is the other question. No? 22-23. Yes.
Yeah, you have to do the estimate. It's like this now. We all have to basically decide what to do when it comes to 15th August when you're doing the set form. If the law is not in place, that means the speaker has not signed off the amendment to the Inland Revenue Act, then you have to do the set, basically the existing law, existing act. Unless the Commissioner General will put a press notice and ask us to do the set on the set of proposals that he will endorse or something like that in practical. So, but any of those things won't happen. That means the speaker has not signed off the law and there is no press notice. Then our position is that we have to do the set as per the existing law.
As it is not effectively established, no?
Yeah, this concept of what you call the substantial enactment, that is for accounting standards, but for Inland Revenue Act, there is no law.
Yeah. Mrs. Sivanesan, they're asking, kindly explain the effective date of VAT rate change for tourism industry.
That also, I believe.
1st of October.
1st October. 1st October.
No, 1st of June.
Sorry.
1st of June. So whoever was 8, so tourism, I think there were 2 rates. One was 8
the
and one was
removal of tourism is 1st October 2020. So I think they can still continue for next 6 months. Next 3 months under 0 rate at the same basis.
Yeah.
And after 1st October 2022, the 0 rate supply will be removed. Status.
Yeah, can I add something?
Yes.
I think there is a confusion with regard to that because there are 2 documents in circulation. When we asked this from the finance ministry, this issue, they said that 12% is applicable for the for tourism industry also, the hotels also from 1st of June.
Yeah, IRD notice also I think states that. And the Gazette also rescinds the old Gazette, the 0 rating Gazette, right?
Yeah, so legal position is also that.
So the 0% also they are put through Gazette, not through law, unfortunately. They have not amended the law with the 0.
Correct.
So
that's why we had the problem for this.
It's a very odd situation, but the new Gazette rescinds that 0% Gazette and says anyone will now be liable at 12. So that's how it looks at the moment. So it is it will be 1st June is what it looks like.
But
but I believe that representatives of the tourism industry had discussions very recently with the finance ministry or whoever, and they were told basically it will be from 1st of October. So that's why that confusion is there.
Okay, right. So nothing surprising, no? Right. Then one more, since the withholding tax on FD interest is the final tax, is it necessary to mention in the income tax statement of other income generation? Do you have to declare it is the question in your returns? It depends, I think, on how the law comes, but there'll be a special place to put final withholdings and you might have to declare it there, I think. Right. So this question, Atula, maybe you can take it. Wouldn't the WHT process make the business undergo administrative hassle of monitoring same whilst the businesses are suffering from economic crisis already? What's the rationale of introducing same when there is a business downturn already? I think we've covered that to some extent. I mean, policy has come through liquor shops.
Anyway, government needs money, no? Now this is a time
that has been
when
established.
government needs money. As a result, that is the very reason why they are proposing various tax amendments to get increase their revenue. As a result, and the other thing is that is the lowest tax collection cost item, the withholding tax. In that situation, if you are really liable to income tax, it is little bit advanced in the date of payment, that's all. But as mentioned, it is very difficult. This is a difficult time period, that's true.
Correct.
What's happening with the withholding tax, we are advancing the date of payment, that's all, ultimately.
Right. Claiming losses 14% against 15% profit, will that be permitted?
Yeah, there should be an amendment to the section 19. 14 losses against the 15 profits, as well as 24 losses against 30% profits, to address both. Restrict to 14 losses against 15 and restrict the 24 losses against 30. Two amendments should be introduced to the section 19.
Right. So I think we've covered most of the questions also in the Q&A, and we are, I think, out of time. Professor, you want to do a final comments from each person, or should we close?
Maybe you can get final comments, and if everyone can open their videos, they can take a photo also.
Right, a quick, maybe a 1 minute roundup. Any comments you want to make just to close up, starting from Nyomal, and then we'll.
Yeah, I think the proposals are salient, and maybe the higher taxes which we have to pay is a necessary consequence of what we have enjoyed in the past, which we just could not afford.
Suresh?
Yeah, but you need to give me more than 1 minute because there's a big comment I need to make with regard to the tax regime in Sri Lanka. As I mentioned, this is a crucial time. Government has to collect the taxes, that we all agree, but at the same time, we need to balance the I would say the people who can't afford to pay the taxes. We have the fundamental overriding principle in relation to taxation: the broad shoulders should bear the burden. So that principle becomes more relevant at this time more than any other time. Now, when you look at the Sri Lankan tax regime, we have 82 indirect tax to 18% direct tax, which makes the entire tax system inequitable. And that is being further enhanced by when we look at some of the income tax policies that we have. Now, through basically making dividends, interest, making final withholding payments, that is a commendable policy, as Nirmal pointed out. But then we have to ask the question, say the earnings from sweat and labor, that is when the profits from employments, when it is being taxed at 32%, and that is basically the working class, the middle class. We do have the investment returns, that is basically the investor category of the society, paying taxes on the investment returns like dividends at the rate of 5% only, dividends only at the 14%, and capital gains, let's say 10%. And when it comes to the dealing in the stock exchange, it is totally exempt. Where is the equity in the society? So this is why there may be other arguments against what I'm saying, but in the short run, at least, honoring the principle, broader shoulders should bear more burden, at least for a 2-year period. We need to look at the equity when you are collecting taxation. And this, to me, that's very, very hard, how do you say, very unjustifiable, inequitable tax policies in operation. Probably the most unpopular comment I have made to in relation to the tax system in Sri Lanka there, but I think what I'm saying is correct.
Dr. Kulatunga?
Yes, I think what we should do as an industrialist and as a taxpayer, all of the industrialists and corporates, they always expect a simpler tax return without making complications. So now this time also the 6 months and 6 months make the tax. Tax consultants, of course, may be good, but as a company, we don't like that type of thing because we do the tax planning for the tax year. So when you have something in between, the whole cash flow gets upset. So therefore, that's something that has to be considered very seriously, even for the future. Because normally we take the tax year as financially as a tax year. So no, the whole tax period is covered by the proper planning. We plan well ahead. Now this disturbs everything. And as I mentioned before, on September, there will be a serious distortion of the tax collection. Very serious distortion will take place. And even the salaries also, the same situation will arise. All companies will start paying bonuses in September now, at the request of the employees. That is going to happen. So that is number one. Number two is about the tax collection. Of course, we need to collect tax at this time. The tax collection is extremely important. Government needs money. But the question of the public is whether this tax money, the money that have been collected by your taxes have been properly utilized. They do have a certain reservation on that, because the usage of tax money for a productive purpose is not happened. So if you see, most of the companies, even recent debate on the health department, the amount of wastage that has been taking place, even the SOEs, say Lanka and all that, and even Petroleum Corporation, there was an article saying that Petroleum Corporation is losing billions, while IO is making huge profits. So these are a few things that taxpayers do not like it. So they have to have the confidence. So this is something that will be looked into and see that there is transparency. The tax collected by utilization of the taxes that we have collected, the transparency of utilization, that will make the taxpayers happy. Right now, they don't like to pay taxes because they always feel that the tax money is wasted. Thank you.
Thank you, Dr. Sivanesan.
As others mentioned also, I think that you must honor the tax principle. You must charge the tax based on the ability to pay. And also there should be equity. And apart from that, one other area we have to improve is the tax administration. I think one of the very leakage in the tax system is whatever tax you charge. If you have a poor tax administration, I think the government is not getting a better revenue. So that is one of the main reason I think the government should focus on this particular subject. That's all.
Thank you, Mr. Atula, to you and my final remarks.
As my final remark, as Suresh correctly mentioned, I think the tax system has to be a rational system. Now, in long run, every year, now once in 2-3 years, we are changing here and there. That shouldn't continue because it is very difficult for us to attract the foreign FDIs. Therefore, we have to have a rational continuing system. That is one requirement. Then the other thing is this equity principle. We have to always think about the equity principle of taxation. Now, after considering the equity principle, we should introduce something which work for at least 5 years. Thank you.
Thank you, Atula. So I'd like to thank all of the panelists. It was an interesting session. I think good points came through, and hopefully CMA could sort of compile these points that came through, and also perhaps as an institute submit it to the ministry as potentially a follow-up to this press release and other gazettes. So Mr. Gajendran, over to you.
Thank you, Sulaiman, and for the panelists for your valuable inputs. As we come to today's end of proceedings, now I invite Professor Lakshmana Vattavala, President of CMA Sri Lanka, to do the concluding remarks.
Let me thank everyone. I think the time has already passed, but I must thank all our eminent speaker and the panelists for giving this exposure to everyone. I think, as I said earlier, one of the topics that is of immense interest is on taxation. I think our moderator, Mr. Sulaiman, you did a very good job, but I don't know whether you gave your final comments. Of course, you said to make the proposals because you're an expert in that area, but I'm sure that you will help us maybe to collate this whole thing and maybe to submit some proposals to the government because as also was mentioned, tax is important. People, a lot of them are avoiding the tax now. That is a major problem. And these not only on the tax, but also on the customs. Now, our imports are double that of our exports, but then is the tax being collected? Is the correct customs duty being collected? Now, these are matters that we need to take into account because we always find the people who are paying tax are paying maybe more and more taxes when the time comes. But of course, they are dedicated people, the corporates, and of course, the individuals who are paying. But let us see how the department could lay the net so that all could pay. If everyone is paying a little, then I'm sure, of course, from the VAT net, all the whole society is paying on the VAT net, but on the income tax also, if we can increase it, that will certainly pay. So let me once again thank you for kindly consenting and giving of your expert opinions, which we will be able to put together. And I'm sure that all of you all will help us to collect, to prepare a document. I'm sure Gajendra, as the chairman of the tax committee of CMA, will be able to get all these together and then submit a proposal. And I'm sure from those who are there, like Nista and Atula and the others, where we can combine some of those with the what the chartered accountants are also having, but bring the costing in, which I think is costing and management in, which will help the government to manage what was mentioned about the SOEs losing so that it can be done. So once again, let me thank everyone and all our members who are there and the others who listened to it and gave so many questions. I think 46 questions. There were many more on that session also, I'm sure more than 50. So we will compile all those and see what best we can go. So let me thank everyone for their participation, for this very interesting and also the tax area. I'm sure the government would be interested to see as to what contribution that the professional accountants could make. So thank you and all the very best and good luck to all of you. Thank you and all the best.
Thank you. Bye-bye.
Bye.
Thank you and good evening.
Thanks, Gajendra, for comparing and doing everything. Thanks a lot. Thanks.
Thank you.
Okay, thanks.